people who are very bullish on gold and,
Sure.
bemoaning the fact that they have gold and you have equity out there. The long-term track record for gold is 3% per annum. If you go back 150 years of gold history, so you're not doing anything great by buying gold. If you're a trader, you got it right, hats off to you. But generally, it delivers poorer, inferior returns to equity over long periods of time. So I'm perfectly fine being in equity. I don't really bother, the means don't bother me. Having said that, I think in '89 it required a particular mindset. I think 2025 required a different mindset for us. How do I explain this? In 1980s, when Japan was very powerful, they had something called MITI, which is the Ministry of International Trade and Infrastructure, and they would direct Japanese corporations move into cars, move into consumer electronics, and they were all powerful until they realized after a few years in the 2000s that the capital was being misallocated, okay? They didn't understand the way the industry was changing. Japan didn't come up with the iPad or with the Walkman or with the iPhone. They're powerhouse in electronics, and yet they didn't do that because state can't direct capitalism. That's just the markets direct capitalism west. What we're happening now is a complete swing of the pendulum. Trump is again directing capitalism in America of all places. Invest in critical minerals, take a stake in Intel, do all these things that India has realized doesn't work because that's crony capitalism that we're doing. But unfortunately, that's happening, whether we like it or not. So my job is first to profit from what's happening. So where is the Indian state directing its resources? It first directed a lot of PSUs. That was the leading edge of capex that took place in India. So it had a huge run into those things, which if you caught, you made a lot of money in there. I think the government will do 2 or 3 things, which I'll just share with your audience. So how the government capex will unfold in my view. One, of course, is the government has made it a national priority to search for rare earths in India. So a lot of capex of government is going to there. So you find the government PSUs or private companies that are looking for rare earths. I think that is one thing to do. The other thing that seems increasingly obvious to me is the government has decided that India is going to be a shipbuilding power. We have a coastline, we have a young population who can be employed, we have the technology to do it. Why do we have 95% of ships made overseas? So I think shipbuilding will be a huge force for good. I think also there's a huge infrastructure push in this country. So something like Delhi, if you've been to Delhi, as I go there quite often, Delhi is a city that is being built horizontally. There's lots of space in Delhi in the 50s, so you had 2-story, 3-story bungalow. They can't do that. It's now one of the most crowded cities in the world. So from horizontal, you're going to go to vertical. And that means a huge opportunity for someone in land development, monetization, construction. So I think government expenditure will probably be focused, among other things, on these 3 areas also. So if you're asking me what am I looking at, I think all those 3 segments represent opportunities for me. In the government sector, of course, I still like the pharma sector. I think some absolutely astounding companies doing intellectual work, owning some real intellectual property. So we're best on that. But we are broadly invested in a variety of companies.
So I never ever disagree with him, but I disagree on this very ardently.
You leave that to my wife.
So the trend of markets has been, ever since the US broke the Bretton Woods standard, because earlier you were pegged to the gold standard, and therefore the dollar was considered, you have to print $1 for every ounce of gold in Fort Knox. Ever since they debased, the value of dollar has actually collapsed. And while the 3% number you may be saying is right on a 150-year basis, from that 1970s to now, that's the magic period. And in that period, remember, the rupee was 4 to the dollar, and we had 90. So in rupee terms, the Indian housewife has been the smartest person to think that the value of what I'm buying is going down every year. Even in the period when it peaked in 1980 and did not perform for almost 20 years, in rupee terms, you were still making money on gold. So this institutional memory that our families have of be in gold and be in real estate was an inflation hedge in India. The additional inflation hedge you're now getting with Trump blowing up the US economy is the developed world is trying to inflate its way out of its debt problem. Japan is expecting, the average Japanese expects a 10% inflation rate in Japan,
wow,
which cannot even grow at 1 or 2%. So imagine how poor those people must be feeling. Like I have a friend who I went to business school with. He was the head of Bank of America. After he retires, he's still commuting in by metro and lives in the suburb of Tokyo and can't afford a big home. So that kind of wealth devastation which has happened in these countries, we haven't seen anything yet. And these guys are going to print their way out of trouble. We will be silly to keep accumulating reserves and thinking this dollar is worth something. I think the new world of China, Russia, Saudi have realized we don't want to hold dollars. And to the point he made on geopolitics, when Saudi says, I'm hiring Pakistan for the nuclear umbrella, is because they saw that America did not come to the help of Qatar or Iran or whoever. So that equation breaking down is leading to a lot of changes. And gold to me is not, it's not an equivalent of a stock. Gold is a currency. And if the BRICS had to settle amongst themselves, you're not going to trust getting a ruble or a yuan. But if the net settlement happens in gold, you'll be okay to do the trade. That's what these guys are going towards. And I'm not suggesting gold today. I mean, at 4,000, it's gone parabolic. And like our markets, it will have a consolidation phase. But this story is not over yet. This move away from tech to hard assets, which occurs every decade unfailingly, is very much on. To just draw back memory, in the 70s, you had the famous run in gold, silver, and oil, preceded by the then Nifty 50 of the US. Then it flipped over in the 80s, and you had a 12-time multiple expansion of the Japanese and the Taiwanese stock market, which was the era of, those were emerging markets then, and then they went down for 30 years. Then it flipped in the 90s back to NASDAQ, and you got the famous stop again for tech. 2000 to 2010, we came back to emerging markets and hard assets, and you know what happened to commodities in that period, and we were going crazy on infrastructure and Vedanta and Reliance and all of that in that period. Then they went nowhere for 10 years. The last decade was the decade of tech, and back to US, and indeed the rise of China. We did not even know Tencent and Alibaba and all existed. We used to pride ourselves on our tech companies, and look what happened across the border. And then they went to sleep. And this decade, the move already has happened towards the hard assets. China is nothing but a hard asset country. It is really the most powerful country in the world today, much as I hate to say it. The fact is, it is there, and it competes with US on an area of superiority now. When Trump tried to wave around his thing of tariffs, one day they shut the critical minerals, next day they stop buying his soybeans. And the guy is talking very, very politely to them. So the world has changed. And if this AI boom had not happened, this to me is the last sign of the mania. That if you're buying a capital goods stock at the peak of the cycle and the peak of the margins and giving it a $4.5 trillion market cap, there is serious money to be lost. They are 70% of global market cap. Are you telling me for the next 20 years, US will make 70% of the profits of the world? 10 companies are 25% of global market cap. This, I mean, I'm not that old, but I'm old enough to understand this doesn't last. This is like when you wake up, you look back and say it was obvious this is going to blow. And there's serious money to be lost. And to keep this party going, they print money. Every morning they wake up and the notes are printing. And it's foolish countries who are accumulating these and thinking these are reserves. Therefore, the smart money, the bigger central banks of the world are buying gold like there's no tomorrow. They're buying silver like there's no tomorrow. So it's gone to platinum, it's gone to uranium. We are only looking at gold because that's what you can trade or what you can see. But this move is for real. Our hard assets, when you put up a cement plant, when we came to the market, it cost 64 crores. Today it is at least 10 times that, if not more. You did nothing, you sat on your cement plant, you were worth 10x. By then you've repaid your loans because the value of the loan you have to repay also goes down in rupee terms. So this trade is here, it's for real.